Once again, good morning, everybody. Welcome to all of you and happy Diwali. Happy Dhanteras to all. So we are good to go now as we have reached a certain level of participants who can just view whatever the session is. So before formally starting about the softwares, a few points about AutoTrender I would like to convey to you. First, AutoTrender is a web-based research analytical tool. As you can notice, some of you may have been using it for quite a long time. So web-based means that you only need an internet and a browser to really make use of the AutoTrender. It's not a machine specific thing where you need to carry a lot of things to really make use of AutoTrender. So what we have done over here is we have made it really user friendly so that you can use all the research inputs and screeners to gauge the market movement and the stock trend. I mean, you will not get any straight calls in AutoTrender as say many softwares are giving say few buying and selling signals. So we do not have that kind of a scenario in AutoTrender. We just provide you with the research inputs, screeners, and certain basic understanding of how to analyze the uh, markets. So based on that, you need to place your trades. And believe me, after you go through the whole session, you will understand how important is it to make sure that every checklist in your stock analysis or in your market analysis is checked. Because solely taking one particular aspect into consideration while making the trades is not at all fruitful anytime. Markets are dynamic, so as we have to be dynamic as well. We need to combine multiple things to really give us a chance to make things better for us. How we make things better will go through in details in the next 2 hours. It will be a 2-hour session, and question and answers will be taken afterwards. I hope that after this session is over, a lot of queries regarding AutoTrender and how to use the AutoTrender will be clarified. So let's begin with like uh, we are only covering the FNO stocks in AutoTrender. So why we are covering FNO stocks is just because we want to give you a 360-degree perspective to stocks. As you may be knowing that stock analysis in AutoTrender is based on technical analysis, prime basis technical analysis, and for the second opinion or validation, we need the derivative data to really get out of a kind of dilemma sometimes we have in order to judge whether we want to take the certain call or not. Okay, so that is the understanding why we have taken only FNO stocks. And believe me, if you are not making money in 200 odd FNO stocks, then I don't think so that you will be able to make money on a consistent basis in certain non-cash stocks. Like some people do come up with a call like, do we have an opinion on Urja Global, or do we have an opinion on Idea, or do we have an opinion on Suzlon? So these kind of stocks we don't really analyze, and that is the reason why we have not taken it in the AutoTrender as well. Market analysis is based on the derivative, or what you call as PCR data analysis. PCR has been making waves ever since there is a lockdown and there is a lot of material, lot of content being shared on YouTube, and most of the people are making use of it and developing a whole lot of defined strategies. So we will certainly look at how the PCR based analysis really helps you in these things. And at the last, I would like to tell you that, like every software, our auto trader software has some limitations. It's not 100% accurate, and we are not claiming to be 100% accurate as well. Why I'm telling you is that some people think that it's a magical software, that we purchase the software and we'll make hell lot of money every time we get into a trade. It will be a winner. I would like to tell you over here is that auto trader has an accuracy of 70% in a normal market, 70 to 75%. But when the market turns volatile, you can gauge market volatility by looking at wicks. Wicks, if it is approaching 25, then the accuracy goes down from 70, 75 odd to 55 to 65. So there is a chance of you getting hit even when you follow every concept, every disciplined trading mechanisms. We'll discuss yesterday's how the market moved, yesterday trades, and what all you should look in to the market just to make better use of your resources. So software is not accurate 100% time, so you need to respect that, and you need to understand that even on say 60% accuracy, you can end up making good returns. So with that thought in mind, I'll move further. Software can be used by a person who doesn't have technical analysis knowledge. Knowledge of technical analysis is not needed when making use of this software. So try and understand the logic behind why we are providing certain inputs, why we are providing you with all the data which normally we do in our analysis, is just to make you a self trader, that you enjoy taking your own decisions on your trades rather than relying on some expert who may not be free all the time for you. Like for Nitinji, expertise every time he cannot be free for you. So so we have come up with the software just to make an extension of the things which we do follow and make you a better trader. It will help all types of trader to improve their decisions making. So basically, here we want to say that there is a myth in some of the traders that the auto trader is just for the derivative trading or just for the intraday trading. But as the webinar progresses, you will notice that some of the things are really good for a positional trader, and some of the things are really good for option traders. So every trader has his space in auto trader. Screeners will definitely help you in filtering out stocks if you don't have that kind of time and effort to devote completely. So screeners will definitely help you in that aspect. Coming on to the support channel, many of us are in the support channel. If you are not really in the support channel, then obviously you can join the support channel by clicking on the join Telegram option on the top right hand side of the home page. I'll show you once we reach to the home page. Now talking about the flow of the webinar, first we'll check the initial indicators on market analysis. First we'll cover the market analysis part, index analysis and market analysis, because lot many people are into say index trading, So first we'll cover index trading and then we'll move on to the stock part. So when we talk about index analysis, we need derivative analysis, and in derivative analysis you have option analysis as well as your future analysis. So certain things in the initial indicator will be taught through future data analysis, and other things will be taught through your option analysis, where you need to understand what is open interest, then PCR and difference data, how it affects the overall mechanism of the things. Then we'll move on to the VWAP theories and the future price action we need to analyze before we take up any trades. Basically, what we are doing with all these analysis is we are trying to gauge the market movement, like whether the market will go up, go down, or consolidate, or it will reverse itself. All the things will be kept in mind. Then the important thing, very important thing, is taking index trades. Index trades are say the 80% job is done when you analyze the markets. Only the 20% where you need to choose the strike price, your SL, your targets, your trailing SL, that becomes 20 to 25%. So this will end our index analysis when we discuss a trade or how we can take the index trades. Then we will come on to the stock analysis, where the first thing in the stock analysis, we need to understand how important is it to make sure that you check this sector strength ranking, because eventually every stock falls in some or the other sector. Like auto sector has Maruti, Ashok Leyland, you have Reliance in energy sector. Talking about banking sector, you have in private banking, you have Kotak, Axis, HDFC, and in PSU, you have Bank of Baroda, Can Bank, SBI and all. So all things put together, you need to first understand how the sector is performing. Then you come on to the stock analysis. Stock analysis also will discuss all about entry level, stop loss and targets. Then we'll come on to some of the aspect which will cater to the needs of our investor client base, wherein we'll discuss how to pick delivery or positional trades. And then comes this much talked about and an interesting stock option section. Then we'll finally wind it up by talking about or just giving you certain information on how the screeners will help you in taking certain trades. So let's move on to our home page. Right now, I am giving you the trading on the old version, and but you can also use our new version. 2 months we have given to the old version and the new version together. After 2 or 2.5 months, we'll completely switch over to our new version. So basically, for the understanding and other things, we are focusing on the old version, and in the end, if the time remains, then I will go through certain very good features of the new version, so that you can understand the difference between what the new gives you and the old must have given you. So coming on to the first point, where I will discuss the initial indicators as to how to gauge the market movement. Here is the first little thing, which is known as Nifty data indicator and Bank Nifty data indicator. I'll highlight these things: Nifty data indicator and Bank Nifty data indicator. Now, this indicator talks all about how the future data is spanning, how the future data is developing. If it's in red, then that means that the future data at the time of viewing this page turns negative, it will give you an idea right from 9:15 to 3:30. Periodically, it will be changing as and when it has a good amount of data. It will definitely give you a result. Like you have seen over here that Nifty data at 3:30. This is at 3:30. Why? Because it is talking about at the end of the day. So at the end of the day, if it is negative, that means that future data in Nifty reflects a negative trend. That is the first checklist you need to take. Nifty has negative data, whereas Bank Nifty has a closing positive data. And we will see later on when we discuss in length about the PCR and how to take trades, how important this figure becomes in order to take the trades. So you need to understand this is the first basic indicator which we are focusing on. This is a future data, and if it turns negative, then it means that the first checklist point has a negative tone to it. And if it turns positive, then obviously it's a positive thing. Then the second aspect for the initial indicator is the market balancer. Here you can look at market balancer. In the new version, you can view this market balancer at the top end of the home page. I'll show you afterwards, but you need to take care of this market balancer as well. Market balancer talks about how the stock data is spanning. I already told you that there are 200 odd FNO stocks. So out of that 200 odd FNO stocks, 85 stocks, here you can see 85 stocks. I'll show you where the 85 stocks are just after this section is over. So 85 stocks data is in negative, whereas 66 stocks are on the buy side. So that means that this also indicates a broader negative trend. The majority is on the sell side. It's not really negative, but the majority is on the negative side. So where you can find these, you come on to the left hand side of the home page, you will witness a miscellaneous section. Under miscellaneous, there is buy sentiment greater than 60. If you click on that, it will give you that 66 stocks which are positive. Okay. Now this is the 66 stocks which are positive, and 85 stocks which are negative are listed on the sell sentiment less than 60. If you look at 80, 85, 86, so that can be taken care of. So this is to gauge where the broader sense of the market lies. It is just like an advanced decline ratio, nothing more than that, but it gives you a valuable input as to where the market is heading. It is the second checklist you need to tick. I already told you that when you take any index trades, you need to have a checklist in front of you just to have a holistic view of where the market is heading. So this is the second thing. Third thing is obviously the index sentiment. As I've already told you that all these stocks fall in some or the other stock sector. So you need to also understand how the individual sector is behaving, just to make sure that the stocks you are talking about, because one thing is pretty clear that you will also understand is market cannot trade in isolation. You haven't seen this kind of a thing wherein Reliance is down 5%, TCS is down 4%, ITC is down anywhere by, between 7%, and still market is up by 4%. It can never happen, because ultimately markets are derived from the movement of the stocks. And if stocks are not performing, then markets will also not perform. And if stocks are not performing, then the major sectors will not perform. Like here you sense there is a mixed feeling, wherein auto is completely in the downtrend, private banking space, IT is in uptrend, then you have your pharma and metals down, energy down. So a lot of things are at FMCG mix. So a lot of things do make little differences. You need to give attention to every detail because markets are dynamic and you should not leave any loopholes in your market analysis. But ultimately, the market is, you can say, a primary driver of everything. So even if you make a very good analysis out of the things, then also sometimes out of the things which are not in control, you might end up in losses. So losses are an integral part of stock market. And if you fear the stop losses, then I think that you are making a wrong sense of the market. You should be happy to take a little loss if it comes and wait for a right opportunity to really give yourself time to think of a better opportunity, better understanding, better analysis, and take your decision. So these are the first initial indicators of how you should look at the markets. The fourth indicator, which is option data indicator, I will talk about it in length a little later when we discuss the advanced part of option analysis and your future analysis. I will discuss all the things. So now coming on to the advanced theories, if you click on derivatives, in the old version, another window will pop up. In the new version, it will come up on the same page. So this is the basic difference when you talk about the old version and the new version, but the analysis and the concept remain the same. I will talk about option analysis and future analysis from a perspective of your Nifty data. Okay, so first of all, before understanding the option analysis, you need to understand what is open interest. Open interest is any open contract which has some kind of an interest in the market. Like I'll give you one example. If I am interested as a buyer in buying 17,800 call option at 25 rupees or 26 rupees, there must be a seller who is equally interested in selling me that 17,800 call. When I am paying roughly 22 to 2300, there is someone at the other end who is willing to take that 2300 rupees from me. So if I have an interest, the seller has also an interest. So both are interest. If it is open, then it is known as open interest. We have not closed any of the interest. Once we have closed the interest, our open interest is closed. But market opens up another open interest. So this cycle keeps on rotating. So open interest mechanism, you need to understand that the entity who is taking, I'll once again repeat for your better understanding, the entity in the open interest, the entity which is taking the risk is the prime driver of the market. Because as a buyer, like when we talk about option analysis, as a buyer, what we are doing is we are giving, say, a certain percentage or point or a premium to the seller for transferring our risk. Here in our example, if I buy 17,800 by giving 26 rupees to the other person, what I am doing is I am giving 2,300 rupees to get me out of the risk. I'm just transferring my risk to the seller who is taking the risk. Because if market tanks down to 600, 1600, 16,000 level, then I will not be in a loss more than 2,300 eventually if I am a buyer. But if the market goes to 18,000 or 18,500, I will be the biggest winner. So as a buyer, I'm transferring the risk to the other person and the other person is taking the risk. So from his perspective, all the things will be judged, not from the perspective of the option buyer. So this is the first thing we need to understand while analyzing the option, analyzing the market through option analysis. Okay, so the first thing is that the person who is taking the risk, which in our case or in any case is the seller, so all the things will be seen from the perspective of the seller. Why I am repeating it every time and time again is just because the whole base of the analysis, whole base of the auction analysis is on this theory only, that all the things should be seen from the seller's perspective. So all the open interest or the change in open interest is the open interest of the sellers and nothing but the sellers. Another logic to it, if I may give you, is if as a buyer of 17,800 call option, I am coming up with only 2,300, and the seller to whom I am selling the call or whom I am giving the premium to, he comes with a bigger margin of approximately 1 lakh to 1,50,000. And even if you take into consideration the recent market margin mechanism, even then, if he hedges the whole strategy, then also is coming up with at least 30 to 35,000. So he is not a fool that he is coming with such a good margin, and I am coming with just 2,300. So it is imperative that you should take the decisions from the seller's perspective. So from now onwards, every time if we convey anything to any of us, we will say that sellers are active. You must have noticed one thing in media channels also, or print media, everyone talks about option writers, option sellers. These are the one and the same thing. Option writers or option seller, one and the same thing, because ultimately they also know that everything is judged from the perspective of the sellers. So now we need to understand what are the 5 columns on the either side of the option, call option and the put option. First is the strike price. Strike price, as you know, that in option, it is not necessary that whatever the stock spot price is, there is a premium to it or something of that sort. Like in future, you can trade in strike prices ranging from 18,500 to say 19,000 levels to 15,000 levels also. So these are the strike price, individual strike price, which we have listed. Just adjacent to it, what we have given is the last price. So last price is an indicative market price. Say for example, at 3:30, 17,800 call option might have closed at 26.25. Similarly, 17,600 call option closed at 95 rupees and 60 paisa. So these are the indicative last price. Third column is your open interest. Open interest is nothing but the cumulative open interest. That means that cumulative open interest since the start of the expiry. Normally, every weekly expiry opens 3 weeks or 4 weeks before. Like today, when we talk about 27th October monthly expiry, we also have an option to trade in November expiry, November weekly expiry, which first week expiry will end at 3rd of November, and the second week expiry will end at 10th of November. So you can always trade in weekly expiry. So this cumulative open interest comprises of every activity since the start of the expiry. Even though I also understand this thing, and you may be aware that the liquidity may not be as great as in the current week. Say if I talk about 10th November liquidity will be 10th November liquidity will be lesser than what you have in the current expiry. So that is eventually true. But when we talk about cumulative open interest, when we talk about cumulative open interest of the sellers, we are talking about the open interest since the beginning of the expiry. Why it is important? Because it gives you a range, or it gives you a resistance and support. When we talk about technical aspect or technical analysis, we base our resistance zone and support zone based on the price action or the charts or the formulation of the charts. But when we talk about derivative data, or when we talk about OI analysis, we are referring to the highest open interest on the call side as resistance, and on the put side, if you come across highest open interest, it gives you a support level. So now you need to understand that you will not have to take any fresh trade on the resistance level or on the support level. It might be a blunder if you take position at the resistance point or the support point, because there is a tendency of the market to retrace from those levels, and you might end up in a trap. So to avoid these kind of a situation, to avoid trapping yourself, you need to take care of the things that this support is being broken. I'll give you a reference of Wednesday's trade, where eventual break of the support level leads to a very good trade, which extends up to 300 points or 400 points, it may be. So it is very important, and you should respect all the resistance and support. So resistance is indicated in the blue, wherein you can see the strike price just at the corner, 18,000. So 18,000 becomes a resistance point, whereas put option, you have an open interest, highest open interest at 17,500. So looking at Friday's data, which has a truncated expiry, 27th is a truncated expiry. Why I'm telling you that truncated expiry? Because it opens for only 3.5 days. 3.5 days. Why? Because 24th is a Muhurat trading, so nothing much will move. Then you have a holiday. Then it is a 25th, which is open, and then 27th, eventually the expiry. So it is a 3.5 day expiry. Friday is already gone. So if you are looking at this data, 18,000 is a broader resistance zone and 17,500 is a support zone. So three things are clear. Coming on to the change in OI. Change in OI is nothing but today's change. Today's change is, say, if I'm referring to Friday, that is Friday's change. And why it is important? To make an understanding of how the market will move on an intraday basis. Intraday activity will be reflected in change in OI. So if you see, I'm talking about individual strike prices, 18,000 strike prices, how many open interest have been added? It is roughly 25 lakhs 36,150. So more and more number of sellers are looking at 18,000 as an option to take 5.65 rupees. Okay. Similarly, if you talk about 17,600 call option, here you see more than 40 lakhs of open interest have been added. Similarly, if you come on to the put side, same at 17,600, more than 30 lakhs of open interest have been added. So these are the individual open interest which we are talking about. And one more thing you must have noticed over here is that there are certain strike prices where there are negative value. Negative value is your unwinding. People are closing their open interest. Now, this means that sellers are really not interested in selling 17,400 call option. So they are squaring off their position. And what they have done, cumulative on a cumulative basis, they have covered 3,22,200 open positions. Still, how many open positions are left? 16,52,150. So every individual strike price has a cumulative open interest, change in open interest, and when you sum up, here is the total for calls and here is the total for puts. So this is the data of 330, and just because we follow a majority kind of a analysis, here you see that the total open interest, total cumulative change in OI for Friday for call option was to the tune of 2 crore 18 lakhs 98,150. I repeat, 2 crore 18 lakhs 98,150. Okay. And on the left, right hand side, there is a cumulative figure for put option. So what it gives you is 86 lakhs 60,750. So if anyone can answer me on the chat, which one has a majority, whether it is a call writers who are active or the put writers who are active, if you can give me a clue. Yes, definitely call writers are active. Yes, everybody guessed it right that call writers are active. And if the call writers are active, what will happen to the market? By probability, the market will fall. Why? Because by definition or by the simple understanding, if call option buyer is thinking that the market will go up, then obviously the call seller will pull the market down. And same goes with the put option. If the put option buyer sees a negativity in the market, what put option sellers will think? Put option seller will think that markets will go up, further up. So in our case or in any of the cases, like always, majority wins. So we need to understand if the majority is on the selling side of the market through option analysis. I am just taking one aspect of derivative analysis. I'll repeat every time I come across this kind of a thing. I will always say that we are just talking about one aspect of derivative analysis to gauge the market movement, which is your option analysis. And option analysis in our case tells us that looking at 330 data, we are sure, or we have a greater probability that markets can go down. One thing which is sure is call writers are very much active than put writers, but eventually market has its own probability, own chance of going down or up. So at present, there is more probability of market pulling down. So this is how we understand these things. Coming back to our home page once again, if you look at option data indicator, for which we have given you 4 strike prices of call option starting from 17,800. C4 means call 4th week. This is the 4th week running. Nifty W is Nifty weekly. So this is the data of money flow. If you are talking about the money flow which is coming into call and puts, this is the data you should look at, the participation data. So if you closely look at this data, what it reflects is that Nifty option data gives you a negative value on the call side. So more and more money is being taken out from 17,800 call option, and 17,500 call option also sees a negative value. Where the money is flowing, it is in 17,700 and 17,600. But the cumulative figure gives you a negative value. That means throughout the day, some kind of a money is being taken out from calls. And what we see on the other side, is how the put is behaving. In all the 4 puts which we are currently seeing, which is 17,400 to 17,700, we all have seen that there is a money flow coming into puts. So this is how one should look at. If the call option has a negative value and put option has a positive value, that means market baseline. And looking at the Nifty data, on Friday, it opened up to a certain level, then it gained some strength, but that strength met some kind of a resistance. Then there was a consolidation phase, and eventually at around 230, it fell down. And then just because it was a truncated week, Reliance results was there, so you had a recovery, a sharp recovery, before it finally closed below your crucial level of 600. So this kind of a thing gives you a negative figure. But going forward on Monday, it would be an entirely different thing, or it may not be an entirely different thing. It all depends upon how the Reliance stock will behave, or how the Murat trading will fare for 1 hour. So you can all understand these things in a better, once you practice it out, once you gain enough confidence to it. So this is about option analysis. Now I'm once again coming on to the thing which will give you a understanding of how the market is really performed in the past, as well as how the markets will perform in future. A certain percentage idea of what you can think of. So for that, for the past references, what we have given is, we have given an intraday data table, which normally has a 15 minutes data. But in the new version as well, you can just click on 5 minutes. If you want a 5 minutes data, in the old version, we need to press 5 minutes and click on submit. It will give you 5 minutes data. But seeing the current volatility, seeing the type of traders you are, you must have an understanding that, okay, if you are a conservative or a moderate trader, then 15 minutes is good enough. Or if you are trading just 1 or 2 lots, then I think 15 minutes is good enough, which will give you a very good understanding of how the markets will behave. But if you are an aggressive trader, professional trader, or you know the risk involved in a shorter time frame, then obviously you can go for a 5 minutes time frame. Currently, for the sake of understanding, I am sticking on to a 15 minutes data point and give you a analysis, a past analysis and a future analysis of how the things may go out. Because why we need a past reference to anything? Because if we are looking at the market at 11 o'clock, we might not know what the market was at 9:15 or how the data developed after 9:15 till 11. Or as we say that use this indicator only after 10:30. So you need some understanding of the data, how the data progressed in from 9:15 to 10:30, and then take a call. So here we bring in a concept of what is known as PCR and what is known as difference. While PCR is put call ratio, put divided by call, or numerator has a put writing, denominator has a call writing. I've already told you that I will be taking only seller side, like put writing or call writing. I will never say call buyers or put buyers. I will always say call writing or put writing. So if I take an example, just to share certain things to you, say put and call. Put has a value, say at 9:30, put has a value of 7818650. 7818650. And call has a value of 6967600. Okay. 6967600. So if I talk about PCR value, then PCR is put divided by call. So here, put divided by call, I have a figure. Oh, just hold on. 7818650. 7818650. Okay. So now I have a figure. Sorry about the misrepresentation of the numerics. So as you can see, when I divide put by call, it gives me a positive value of 1.12. You need to understand that if this value is above 1, then market is in positive. And the progression of this PCR gives you 3 answers to 3 questions. What are the 3 questions? Whether the market which has opened will gain strength in the same direction it has opened. Say if it opens positive, then the first question which comes to our mind is, can it hold and strengthen itself? Like if it opens 50 points, whether it will go from 50 points to 100 points, 100 points to 125? That is our first basic question. So for that, we need to check the PCR progression. Okay. And the second question is, can the market turn sideways? Or the third question is that can there be a reversal of things? So all the three questions will be answered looking at the PCR value from 9:30 to 10:30 or 11, which we are looking at. So coming on to this thing, or coming on to the slope of the data. So like here you see at 9:30 what has happened. It opened up positive. It opened up positive over here, and gradually it sinks down. You look at the trajectory. It gradually sinks down. It comes back again and goes up again from negative to positive, stays positive for some times before eventually going down or tanking down at 2 o'clock. If you closely look at, this is the time 2 o'clock. So it has this kind of a battle or this kind of a progression. So the data which gives you a clear indication as to how the markets will perform from the option side is your PCR value. So you need to check that whether my PCR value is going from 1.1 to 2.2 to 2.2, 2.2 to 3, 3.2, 4. This is the market is gaining strength from positive to another positive. But when it reverses itself, like you will see at 9:30, the market opened 1.12. At 9:45, it slips 1.04. Why it slips? Because at 9:30, the call writing was on a higher side than, put writing was higher side than call writing. But eventually the gap narrowed. And at 10 o'clock, it slipped below 1. Why it is 1? Because you see 15.88 divided by, 14.73 divided by 15.88. If I look at once again, say 14.77 divided by 15.88. Gives you a negative value of 0.93. So that means if the market is negative, then PCR will always have to be below 1, because call writing is more than put writing in that case. So you need to see the progression of the things to understand where the market is heading from the option side. Now after PCR, we'll discuss what is difference data. Difference data is nothing but put minus call. In case of PCR, it is put divided by call. In case of difference, it is always put minus call, which will give you 1.1 in our current case at 10 o'clock. If you look at, it is 1.1, which is 11,57,200. It will be positive if the market is positive. It will be negative if the market turns negative. So you need to also look at this figure in absolute term, that it is gaining strength or not. So if it is negative, then it will go from 11 lakhs to 12 lakhs, 12 lakhs to 14 lakhs. And if it is turning positive, then obviously first it will dip, like here if you see at 11 o'clock, it dipped from 14 lakhs to 40 lakhs. Your PCR also strengthened from 0.9 to 0.98, and eventually at 11:45 it again head back to positive side. So this completes our option analysis, the first part of option analysis. It's been quite a while we are talking about these things, because but this is very much important in order to have a proper understanding of the things. Now we come on to our future price analysis, which is based on the VWAP theory. VWAP, what is VWAP now? VWAP is volume weighted average price. How we see the difference between a simple average and a volume weighted average? Here, with an example, I'll tell you. So, if suppose my price travels from 17,000 to 17,500, and then from 17,500 to 18,000. So the average becomes what? Average is 17,500. Let's put in a weight to it, or let's put in the number of lots it has traded, volume it has traded. Say on 17,000 it traded 100 lots. On 17,500 it traded 50 lots, and at 18,000 it traded 10 lots. So cumulative it has traded 160 lots. So now how the average will differ, we'll see to it. If we multiply 100 lots by 17,000, it will give me a figure. Then it will give me another figure. Now, if I take an average, it will be 17,218.75, which is significantly lower than what we have taken out in the simple average. Let's talk about another thing, how this particular VWAP is more stable than our earlier simple average. Say from 18,000 price moved up to 18,400. Now my simple average becomes what? 17,725. But at the same time, if I say that at 18,400, another 10 lots were traded. So how the markets will move, or the average will move? Average will move from 17,218 to 17,288.24. So while the simple average moved 225 points, my VWAP hardly moved 50 points. Take another example where the prices now dipped to 17,700. My VWAP gains strength by 50 points in the simple, my simple average gains strength by 50 points at this. But if you closely look at, again 10 lots were traded, my VWAP also strengthened by 10, 20 points, 30 points, but it is not as significant as my simple average. So you need to understand at this point that VWAP is much more stable average, and we will use it for two things. One is to gauge the future price action, one, and another is to place our stop losses. And how we will do that, we'll discuss it a little later. First, we need to understand how to analyze the future price action. So here what we have given is VWAP signal. VWAP signal is very simple. If you understand VWAP, what is VWAP? And this price is, this particular price is the future price. And the VWAP is also of the future, because spot is never traded. It is always the future which is traded and has a VWAP. So VWAP signal is very clear that if the price is above VWAP, then it is stronger. Anyone who is above average is considered to be stronger. Anyone who is below average is considered to be weak. So by the same theory, we have identified the future price action also. So this completes my session, like training on how option signal is taken and how the VWAP signal is taken. Option signal is taken when your PCR or the majority of the call writers are on the higher side, then the market tendency is to go down. Otherwise, if the put writers are on the higher side of or the PCR is positive, then obviously the option signal will be positive. Whereas VWAP signal is when the price is below average, then it is considered weak, and if the price is above average, then it is considered stronger. So now, how to combine these two things in order to take the trades? So first golden rule is that you need to, every 15 minutes or every 5 minutes, you need to check that whether my option signal or VWAP signal is on the same page or not. Like if you consider at 9:30, option signal was buy and VWAP signal was also buy. Okay, so it is on the same page. But can we place an order? The answer is no. As per our approach, or if you follow our approach, then you must take the decision only after 10:30. Okay, so if you look at the data at 10:30, you will realize that it turned from positive to negative. Okay, now an interesting question comes in, that how we can take the trades. Say this is the only data you don't have, this is the only data, and you don't have the future references with you like I have. So what you will do is you will take sell and sell. So option signal is also having a sell and future signal is also having a sell. Whereas at 9:30 the PCR was positive, at 10:30 the PCR was negative, and it significantly dropped to a level. So you may be tempted to take a negative side trade. So first thing you need to ignore looking at this data is that you will not enter into any bullish strategy at this point if you are looking at this data. One more thing you need to look at, how is your support and resistance taking shape. In this case, it might be possible that this is, if I take this as true, then 17,500 happens to be a good support. So you still have, say, looking at the future data, you still have, say, 100 points gap. So now what you need to do over here, you need to plan a bearish strategy. Bearish strategy means that you always need to take a short side to the market. How you can take a bearish strategy? Either you can buy put, or you can short a call, or you can short futures. Either of the three or a combination of the things will give you a bearish strategy. You need not to take a bullish strategy. Now, the second question is how to take a trade. Selection of strike price. If I say that you will always be tempted to take a simpler option, which is buying a call or buying a put, I'll say that looking at this data, you buy a put. So strike price, what will be the strike price? Strike price will be on Friday, Monday until Tuesday. You can take one strike price out of the money, or one strike price in the money, and one at the money. So considering that yesterday was a Friday, then obviously you could have taken 17,600, which is at the money, 17,650, which was in the money, and 17,550, which was out of the money. You could have taken that thing from Monday to Tuesday. But if it is Wednesday or Thursday, then you don't fall into a trap of taking a out of the money option. Why? Because future price may move, but eventually what will happen is that the kind of movement you will see in out of the money will not match with the movement you see in the future. So by the normal understanding, you should never attempt to buy a out of the money or deep out of the money option on Wednesday and Thursday. You may fall flat. So close to money or at the money is the best option available. So you have selected 17,600 as put option. Now, then what will be your stop loss? As I have told you earlier also, that stop loss by this approach, we have considered on VWAP. We will not take option pricing as a stop loss. Some people, what they do is, or there is a common tendency in most of the retail participants, is to take option pricing as a stop loss. Say if they buy at 100 rupees, they will say that, okay, 70 rupees or 30 points hit, I will take. So this is a incomplete notion these days. Why? Because there is more volatility to the market. In the normal, if you consider 1.5 years back, then I would have said that, okay, you can take 30 points as normal stop loss. But these days, people are becoming more and more smarter. So 30 point stop loss or 25 point stop loss is not a good thing. And VWAP is much more stable. So if you talk about VWAP and stop loss theory, in Nifty, we take a normal volatility of 25 to 30 points if we are choosing the VWAP theory. Otherwise, in Bank Nifty, you can take from 40 points to 60 points because Bank Nifty is much more volatile than Nifty. And when you are taking a put, then your stop loss will always be VWAP plus your volatility points. And when you are taking a call option, then obviously your stop loss would be VWAP minus the volatility points. So in our case, when the VWAP is 17,618, then what would be your stop loss? Considering you take 30 points hit is 17,650 or 648, or little stretched also. If you take, then it can be taken care of. Now you are done with your strike price selection, you are done with your stop loss. What will be the target? Target will be the difference between first target. I'm talking about first target. First target will be your difference between future price and the eventual stop loss. So in our case, when the future price is 17,618, then obviously what you will do is you will take 30 to 40 points hit, or 40 points target would be there. So it is right now 1:1, but then when you take another trade or some kind of a Nifty trade, I will also discuss Nifty trade, Bank Nifty trade with you. So you can see that sometimes it is 1:1 or sometimes it is 2:1 or something of that sort. You can just take into consideration that. Now, once you have taken the trade, you now just have to see that whether my stop loss, eventual stop loss, is getting hit or not. Till 9:30, the stop loss never got hit. But at 11:45, your stop loss got hit. So this is how the things are. At the time of starting the webinar, I've told you that stop loss are an integral part of trading. And if you fear the stop loss, then eventually everything will fall apart. So respect the software accuracy, respect that the software cannot be 100% right. You need to give time, effort, and some practice to the concept, and eventually you will see that you will be coming out a very good winner. So this time round, yesterday you got hit, but the hit was hardly 30 points. 30 points meaning if you would have taken one lot, you could have ended up at a loss of 1500, which could have been recovered on a later date, or if you look for opportunities on the some other indexes like Bank Nifty. So if you look at the Bank Nifty data, yesterday Bank Nifty data was far more better than Nifty data. Okay, so if you could have closely looked at the trajectory, why I'm talking about the trajectory at 10:30, if you look at both the graphs are a much more cleaner way of looking at things. Why? Because it's a pictorial representation and it gives you a much better understanding. So if you look at Nifty chart at 10:30 or 10:45, you may say it is close to flat or slightly negative. But if you see Bank Nifty data at 10:30, it hardly had a downtrend to it. It gained strength from 9:30 to 10:30, and eventually it gained strength till 1 o'clock. So Bank Nifty was yesterday was much more better opportunity to take a trade. So this is how you look at things, and this is how you gain experience. First one or two trades may go wrong, or first one or two trades may be winner, but you cannot base your whole understanding of the software based on the initial trades. You need to practice it out. So yesterday, if you look at 10:30 data, you must have noticed there was a buy call in Bank Nifty. So strike price selection, how you could have done 40,688. So the closer to 40,688 was 40,700 call option. If you take call option as an example, then eventually about 1 o'clock, what you notice is that you had a decent gain of 40,900, 949 odd. You could have ended up in profits. Just for a moment, I need some time. Thank you. We'll resume after 2 minutes. Thank you very much for having a patience and giving me a 2 minutes break. So this particular understanding of concept needs practice, and I believe that after this session, things are very much clear that how you need to practice and how you need to take everything into consideration while making a trading decision. So this is a very good tool for your better understanding and data analysis, which eventually will give you great results if you give some kind of a time to the concept itself. There is, as you can see, there is no buying signal or selling signals. It's just the analysis of the things and how you relate to those things. So now by this, we come to an end of our index session. It's been almost one and a half hours. I've been taking this index session. Before moving on to the stock section, I would like to tell you how Wednesday's trade was delivered. So if you closely look at, on Wednesday, we took 40,500 put option. How we come to the conclusion that we have to take 40,500 is that you just look at this data at 11:15. If you look at from 9:30 to 10:30, there was no clear cut signal, and till 11:15 there was no clear cut signal. But one thing which was very sure was that VWAP was on a sell side twice in a row, and from 10:45 to 11:15 there was a massive dip. Or if you look at from 10:15 to 11:15, there was a dip from 1.76 to 1.24. This means that the data is on a declining side, even though it has been on a positive, option data is on a positive side, but it is declining. And at 11:30, if you see, if you come on to the right hand side of the things, then third consecutive VWAP sell signal, and from 1.24, my PCR dropped from 1.13. Again, on the top end, you will notice that 40,500 you have on the put side. I'm talking about the put side now. 40,500 put option has an open interest of 47,48,200, which gives me a 14%, which gives me a percentage change of 703%. And at 11:30, you have a PCR down to 1.13. Your VWAP signal was sell third consecutive time, but your open interest, cumulative open interest, hardly changed. Like 47,48,200 to 47,77,000. So it hardly dipped. Okay, but now comes an interesting thing. At 11:45, if you look at 11:45, the PCR suddenly dropped from 1.13 to 0.74, and there was continuous selling in the future. And how we come to a conclusion that now we are ready to take 40,500 put option is because the open interest went down from 47,77,000 to 32,69,000. You see a huge unwinding in the put option data. So more and more people who were protecting 40,500 are now getting out of the trades. So getting out of the trade means that there is an opportunity to it. So you could have taken trade at 11:45 by buying 40,500 put option. 40,400 put option was somewhere round about here at 11:45, at 19th October 11:45. You can see the high was 243 at that time at 11:46. Okay, and eventually what happened was at 1 o'clock, at around this price, at 1 o'clock it touched 380 to 400. So see the kind of moves it had from 243 to 400. So this is the power of data, and this is the power of how you need to take everything into consideration, and eventually it will give you a profitable trade. So this is the end of the session. I hope it was a fruitful thing for all of you who are attending this session. Now, I will again move on to the software, and we'll discuss more about stocks. We'll take up few queries on index in the Q&A session. Post everything has been taken care by me. So now, coming on to the stock thing, first thing we need to understand or we need to discuss in stock analysis is sector strength ranking. Now, as we have already discussed, that every stock belongs to a particular sector, and if the sector is moving, then obviously all these stocks or some of the stocks have some potential to really give you that kind of a movement. So what we do over here is, when we trade in the stocks, first of all, we take technical analysis as the base. Okay, I'll tell you how we come to a thing. Like, I'll take Eicher Motor as an example. Eicher Motor, you can see there are 9 indicators. Okay, 9 indicators. These are the 9 technical indicators we have selected from a bunch of 450 to 500 technical indicators which are available in the market. So, and the second thing which we have done is to hide the names of the indicator, because it gives a biasness to end user, and we want end user to emphasize on the output rather than the name of the indicator. For the sake of telling you the names, it could be, say, your RSI, it could be Bollinger Band, it could be MSI, MACD, it could be super trend, it could be simple moving average or exponential moving average, or anything. The best indicator, 9 indicators which we have selected for you. And if you talk about technical analysis, then in technical analysis, there is an importance of time frames. Every time frame has its own importance. If you talk about 5 minutes or 15 minutes, it will give you a intraday perspective. When you are really looking out for an intraday trade, say from 9:15 to 9:30, most of the technical analysts prefer 5 minutes and 15 minutes chart analysis. So what we have done is, we have given you a figure over there. Now, when we talk about 30 minutes and 60 minutes, what it means is that short-term perspective to the market or short-term perspective to the stock. So how positionally, short-term positionally, or from a very shorter time frame, you are looking at how the stock is really performing. And when you talk about daily time frame, it gives you a medium term to long term structure. When you talk about medium term to long term structure, then definitely what happens is that it gives you a clear understanding that whether the stock is in buy on dips mode or a sell on rise mode. To give you a better understanding over here, how these things, what we have done is, we have given you a separate daily sentiment, a separate short-term sentiment, and a sentiment average. So how it will help you in all the things, let's cover. So when I talk about daily sentiment, say, when I'm ready to take the trade, I will first thing which I look at is how daily time frame is really giving me a clue. So Eicher Motor, for my understanding, is at 89% up. So out of 9 boxes, 1, 2, 3, 4, 5, the fifth one is a down. So out of 9 boxes, only 1 box says that it is down, or more clearly, only the 5th indicator tells me that it is down. all other 8 indicators. So again, the concept of majority comes in, and majority says that it's an uptrend. So what I will follow is, I will follow a buy on dip strategy in Eicher Motor for a while. For a while, until the data changes itself to from buy to sell. If the data tells me that it is turning from buy to sell, then first I will wait and then eventually take a negative call. Otherwise, I will not take a negative call on Eicher Motor anytime soon. Then if I want to trade on an intraday basis, then what will I do? Or from a short-term perspective also, what I will look at is, I will look at short-term sentiment. Short-term sentiment gives me a clear understanding of the stocks from a shorter term time frame. So 86% says or 86%. How we arrived at 86%? If you look at 9 indicators and 4 time frames, it will give you 36 boxes. Out of 36 boxes, only 5 boxes are suggesting a downtrend. All other boxes, all other remaining 31 boxes are giving me a buy indication. So what I will do is, I will listen to majority and try to take a positive call on Eicher Motor. And if I combine short term with daily, I will give a sentiment average of 88% to 12%. How? Now, if I take into consideration all 45 boxes, only 6 boxes are suggesting me a downtrend. So remaining 39 boxes are suggesting me a uptrend. So 88% indicators are, and on all time frames are suggesting a buy. So it's a buy for me. So this completes a technical analysis. Now, if you want to take a step further and want to test this particular stock on a derivative side also, which gives me a 360-degree perspective, what I will do is, I will look at derivative aspect to it. Derivative aspect is discussed in length at index. The same concept works on stocks as well. These are all the writing data. Call option writers and put option writers. How? Here you see. Look, since it's one more thing which I will discuss later on as well, when we discuss the stock option part, is since stock option expiry is on a physical terms, like if you carry it till the expiry, then if it is in the money, the option lands up in the money, then you need to either purchase or sell the shares. So it's in the physical delivery. So when the stock option is in physical delivery, the data in the last week of the expiry, last week of the monthly expiry, even though it is correct, but it is of no relevance, because all the major participants or almost 80% of the participants roll over their position from one contract to another. Before the start of the last week, what they will do is 80% of the times they will close their position from this week, and they will try to shift their position in the next series, because they don't like retailers like me who don't have enough money to really give it as collateral to buy or sell the stocks. I will not take any risk of penalties or getting a delivery assigned to me. So what I will do is, I will close my existing position and take a fresh position in the November contract. So this you need to keep in mind while taking option analysis together with the stock analysis. So in the last week of expiry, as the case is today, you don't have to look at any option data. Option data may be right, but it may be defective in interpretation part. But other than last week, you can look at this data. This works beautifully. and you every time you have a charting reference to it. So as you have noticed in the index also, we do give charting references to make you understand better. The same way we have given you this particular aspect also. So now coming back to the sector strength, I hope you have understood clearly about how we take the technical analysis into consideration while selecting the stock trend. Now, the important thing is that every sector has movement, and the movement is maybe in line with the market movement or may not be in line with the market movement. So we have sector strength ranking. Yesterday, what all sectors were prominent? Banking sectors were prominent. That is why we have seen that Bank Nifty moved much faster than what Nifty does. Okay. And how? So now why it is in green or why it is in red is just because daily time frame. In sector strength ranking, we take daily time frame as base, because daily time frame gives you a better understanding of the medium term to long term perspective of the stock or the sector, as we have discussed. So now in this thing also, while analyzing the sector also, we need to look at how the sectors are performing on the daily time frame. If you look at PSU and banking, private banks and public banks, both are really good, along with IT recently off lows, are doing really good from a medium term to long term perspective. But then if the same thing comes in our shorter term time frame, which is 15 minutes to 30 minutes and 60 minutes, it gives me a green indication, so as to I can identify very clearly that which sectors I need to look at. So yesterday, if I want to short the market, I may have been looking at pharma or metal. Why pharma or metal? Because of late, pharma and metals are at the bottom too. So as and when the same sector comes in 15 minutes, 30 minutes or 60 minutes, the system highlights it in red or green color. Clearly understood? So now yesterday, since the market was positive and then negative, then positive, so we could have looked at banking as a safer option. So if we click at, say, private sector banks or PSU banks, where it is given the sector bifurcation is on the left hand side. Sector, it gives me, say, PSU bank and private bank. Just click on PSU bank, it will give me a list of all the stocks. Again, in the same way as we have analyzed the sector, the same way we need to analyze the stock as well. So you can look at in the daily time frame, these three stocks, IDFC First, RBL Bank and Axis Bank, are all gaining strength. The same way, if you look at 15 minutes, 30 minutes and 60 minutes, RBL Bank and Axis Bank, both are coming. And if you look at the weaker sectors, weaker sector meaning, weaker stocks meaning that Indus and AU, just after the results, Indus and AU did not do well. And index on the IndusInd Bank on the day of results tanked almost 6 to 7% on an intraday basis just after just before recovering. So that's why on Thursday you saw Bank Nifty really not doing well as it could have done. But come Friday, it worked wonderfully well. So what you could have easily done, if you want to short some stock, then IndusInd Bank and AU Bank, or if you want to buy some stocks you could have ended up on Axis or RBL Bank. And some of the advanced level traders, what they could have done was they could have bought Axis Bank and shorted Indus or AU Bank, or they could have bought RBL Bank and they could have shorted AU Bank or IndusInd Bank. So the combination you can choose, but this is known as pair trading, and pair trading also works really well with data points. So Axis Bank, if I take an example, so here we landed up in Axis. So Axis right from the very beginning was moving quickly and very swiftly. Eventually it closed at 900, but look at the things where you could have given some importance to it. If it was not a expiry week, the monthly expiry week for the stock options, you could have paid attention to maximum call open interest, which happens to be a resistance. As soon as 850 was taken out, or you could have taken a higher quantity and made quick profits. Otherwise, what we have designed on an intraday basis for you for entry, exit, support and resistance, and your targets and stop losses, what we have come across is your support and resistance pivot point theory. How it works is, pivot point theory has 5 to 6 formulas which are available freely on Google and YouTube. If you can search it out, we have taken one of the formulas and given you. And pivot point theory works on open, high, low, close of yesterday. Say if I'm talking about Friday as a base, then pivot points are calculated based on the open, high, low, close of Thursday, and it works only for intraday. So this particularly price points are for intraday. The next day, another set of pivot point data will come for Monday, or for that matter Wednesday, or for that matter Thursday. So this is the pivot point theory which we work on. So the classic entry. So now talking about entry, first we have landed up at Axis Bank thinking that it will give me a very good result. First thing which you need to check over here is that how the sentiment average is. If the sentiment average is greater than 60% on the upside, then definitely you can note down. If the sentiment average is greater than 60 or 70% on the upside, up percentage, look at up percentage, then you can look for buying opportunities. Otherwise, if the percentage is above 60% or 70% on a downside, on the downside, then you may look for shorting opportunities. Up percentage 60%, buying opportunities. Up percentage more than 60%, down percentage more than 60%, shorting opportunities. Right now I'm looking at buying opportunities for Axis. So now one thing is clear, that it is above 60%. The second thing which we need to look at, whether it is trading above PP level or not. If it's trading above PP level, which is in our case 825, then obviously we can look at buying. The best entry level for buying happens to be at between PP level or R1. R1 is resistance 1, R2 is resistance 2, R3 is resistance 3. S1, S2, S3 are support 1, support 2, support 3. So for Axis trade to happen, the best entry would have been between 825 to 833. And where you could have placed the stop loss between S1 and PP level. The stop loss level would have been in between PP level and S1 and the entry level was 100% from PP level to R1, if it is. Okay. Now, the logical question, or most of the people ask me that what if the stock price is already between R1 and R2? What we have to do in that case? Then the answer would be that don't lose opportunity. Stock is very good. Stock is in uptrend. Don't lose opportunity, but don't take excessive risk, because the tendency of the stock is to come back to its averages. So when I talk about don't lose opportunity, I will say that take 50% of the position. If you take 50% of the position, and if it doesn't come down and it goes up to R3, then book your profits. And if it does eventually come between PP level and R1, take another 50% of the position. And this time the combined 100% position, the stop loss would be below PP level. So there it is done. And if it comes back again to R2, R3, then book your profit from R1 and R2. So this is the whole concept of understanding how the stock really works. So in this section, what we have discussed sector strength ranking. We have discussed your stock understanding of technical analysis, how the whole concept of technical analysis is being shared in our auto trader software, and you can easily see that you don't need any technical knowledge. Say, if I say, take another example, and I give you a sector from metal, say a stock from metal, and I take, now metal is down. Another thing which I might have missed is, since the sector which we have selected is down, then you need to select the stock which is weaker. So weaker sector, weaker stock, stronger sector, stronger stock. So there is no point taking a short trade on National Aluminium, but you can always take a short call on Hind Copper or SAIL or Jindal SAIL. Okay. Jindal Steel don't take short position, because it is on the top end of the bracket when it comes to daily time frame. So the best play is either take SAIL or Hind Copper. Say select SAIL. SAIL you can see over here. Now, if you look at daily sentiment, it is down. Daily sentiment is 78%, right? Daily sentiment is 78% down. So you can take a short call. Further confirmation of short call means that the down percentage is 72%. So the second checklist is also clear. The third checklist, whether the stock is below PP level or not. So stock is clearly below PP level. PP level is 79, stock is at 77.85. This is 330. At the time of initiation, it might have been closer to 79. Okay. So now what you could have done was, since S1 and PP level, since the stock lands up between S1 and PP level, you could have taken 100% position over here, 100% position, and the stop loss would have been your 79.50 or 80, and you could have ride the trade. So this is how you look at different things and different sectors or different stocks while trading the stocks. Index I have already covered, stocks I have just now covered. So any further questions will be taken in the Q&A section. Just now I want to discuss some delivery trades with you, how to take delivery trades, and then we'll discuss about stock options. 5 things you need to understand on stock options. And finally, we'll wrap it up with screeners. And in screeners, we'll discuss certain things which may be very productive for you. May not be productive right now because it's a expiry week, but later on it would be very productive. So quickly come on to the delivery part. Just hold on. Okay, so the thing is, in the older version, the delivery tab is in the derivative section, but in the new version, it is given on the left hand side, just bottom left hand side, you can see the delivery tab. And how to use this delivery tab for your positional trade, I'll just share few things with you. Say take Aarti Industries as an example. Okay, so when you want to take a positional trade based on this data, first thing you need to check where is the highest delivery. This is the 30-day data, 30-day average data, and you need to check the highest delivery point, which we have indicated to you in blue, just for a better understanding of things. So on 19th October, Aarti Industries hit its highest delivery. So now what you need to do is you need to check what is the high of that day of 19th October and what is the low of the day. High of the day is important because once it crosses on the subsequent day 710, then we have to take the position. And why 642 is important? Because it will act as a stop loss. So right now what you need to do is you need to take Aarti into your watch list, and once it crosses 710 on any subsequent day, it may be 24th, it may be 25th, it may be 30th, it may be November. As soon as it crosses 710 and closes above 710, that is the time you need to take Aarti as a delivery trade. Once you take the delivery, say suppose you take a delivery at 712, then your stop loss would be 642. Okay, why 642? Because it is the low of 19th October when the stock hit the highest delivery. So this is very important for you to understand that high and low of the day when your highest delivery is hit will act as a stop loss and act as a highest delivery point, the delivery point also. So in case you have taken delivery at 712 and your stop loss is 642, then you are taking a hit of 70 points. That means you are taking a hit of 10%. 10% hit for a positional investment trade is decent enough, where you are looking for a much higher target of more than 20% on Aarti Industries. So if you are taking a hit of 70%, if you are taking a hit of 70 points and a 10%, be ready to take a profit of 140 points or 20%. And if you are not really thinking of giving a 10% or taking a chance of getting a hit of 10%, leave that stock. There are ample opportunities in the market to take. Say, for example, take a TCS stock. So TCS, what it gave an indication on 16 September, it hit a highest delivery, which is indicated in yellow, blue. So what we have focused was that as soon as it breaches 3094 mark in any of the subsequent day, we'll buy this stock with a stop loss of 3000. Now you see on 6th of October or 4th of October, it hit a high of 3098 and eventually closed at 3091, which is closer to 94. 3094. So on 4th October, if you could have taken, you could have taken already a good profit of 60 points. So, but the eventual thinking is that if we are taking 100 points hit, then at least we should get 100 points or 200 points. So my eventual target would be 3300 on TCS and the stop loss is 3000. Even if you are taking a late entry at this point also, then also 3160 will be your point of entry because it has already crossed 3094. Now your stop loss is little on a higher side, which is 160 point stop loss, and the target you could set 3400 for you. And another stock which you might look at is anyone can give me a stock, say in chat box, anyone can give me a stock. Say Ankit Nair ji has requested ICICI Bank. So I'll take ICICI Bank for example. Say, look, on 21st October, which is yesterday, it hit a highest delivery in last 30 days. So your entry point for this stock would be 910, above 910, and your stop loss would be 885. Another stock which Ashish Gupta ji and others have requested is Reliance. So, sir, Reliance, yesterday there was a result and we would, okay, not REC, it is Reliance. But one thing is pretty clear, that highest delivery was at was on 16th of September, highest delivery 2553. So once it crosses that 2553 level, which I think eventually it will cross tomorrow or after that, it will be considered. You can consider it in your investment list by keeping a stop loss of 2491. This is the thing. This is the thing. So these two stocks are good enough. Other one, most of the people are asking is Tata Steel. I think it is a favorite, and Vedanta from the metal sector. So again, going by the same concept, 16 September, highest delivery was at 107. As soon as it crosses 107, you can take the delivery by keeping a stop loss of 105. The stop loss is too less for our comfort, but then you can take a try. Vedanta, you can think 320 eventually is the target to look at. The entry point would be above 320, 321. Highest delivery point was on 15 September, where the high was 321, and you can keep a stop loss of 305 then. Till date, the highest point it has gained is 293. So it is again in the watch list. So this completes the delivery model, and it will also give you a very good results once you take time to practice it out. Practice giving time to a concept, disciplined way of trading are all the three aspects or four aspects which you eventually need to understand in order to be profitable in the market. Now coming on to the stock options. Stock options, I would rather leave it uh, for this time because it is expiry week, but 5 basic points I will discuss on the stock option side. Say, first mistake what the traders do is they look at stock option first rather than looking at the stock itself. So for our understanding, or what we promote is that you should look at stock first, then you decide which option you want to take. Say, for example, I say Axis Bank. So Axis Bank, first you need to understand the how strong or weak the stock is on technicals. Then eventually you move on to stock. And the better entry would be at the money option, because at the money option has the momentum. You might argue that seeing the movement of Axis Bank, which has traveled yesterday from say levels of 832 to 900, it say 9, I could have taken 900 call option as well, but believe me, this will happen one time out of 100 instances. This is one instance out of 100 instances where you might have seen such a good move, but on most of the cases the moves would have been from 2 to 3% or 5%. So there you need some kind of a momentum which will only be there in the at the money options, not on all options. So first thing, you need to understand this thing. Second thing, which most of the traders ignore, is the liquidity aspect. Look, the kind of liquidity you will see in Reliance or HDFC Bank or say TCS or say your ITC or SBI, you won't see in say Polycab as a stock, or you won't see it as an Apollo hospital. So liquidity is very important for entry and exit. So this is, you need to keep in mind. Third thing is your lot size. Nobody can be comfortable, or some of the option traders may be comfortable doing heavy lot sizes, but not all participants are comfortable. So you should not go for any heavy lot size contracts if you are not comfortable with it. Choose smaller contracts like Kotak Bank, like ICICI, ICICI, HDFC, Reliance, which has some sense to lot sizes. Don't go for say 9,000, 5,200 or 3,000 if you are not comfortable with it. So comfort zone is very important when you take the stock option. Fourth is, don't play 30 paisa game or 40 paisa game. I have noticed many traders, what they do is, sir, we'll take SBI call. Why would you take SBI call? Sir, because SBI has a lot size of 3,000, and even if we take 30 paisa, it will be converted into say 900 rupees. We are just paying 100 rupees or say less than 100 rupees in say discount broking arms. So we'll be comfortable with 30 paisa. Don't do that mistake, because in order to take 30 paisa, you might end up losing 1 or 2 rupees. So this is a big no. And eventually it will it will create a very bad management of stock options. So don't do that thing. Fourth or fifth thing is that you will not trade in the last week of expiry based on the data provided in our uh, option analysis, because data might be right but the interpretation may be wrong. As I've discussed, as I've already discussed in the earlier section. So these are the 5-6 points which you need to understand while taking option trading, stock option trading particularly. Index option doesn't have that kind of a thing because liquidity is there, entry exit is always there. Then you have don't have the physical delivery attached to it. Momentum is always in the at the money or close to money options. So these are the things which I personally need to discuss. I wanted it to discuss it with you, so I have discussed. Now coming on to the last section, I hope this 2-hour long training session was fruitful for you, and eventually you will make some good use of our software. Give time to the software and things will improve. Now coming on to the screeners, as you can see, some of the screeners are 5 minutes and 15 minutes, which is for the intraday perspective. Intraday perspective gives you a quick entry and quick exit. Don't carry any trade which are coming in this tab or this screener. I mean, Hero MotoCorp might be good, but as per our data, it is only good for 5 minutes and 15 minutes or intraday purpose. Why? Because in daily sentiment, look at daily sentiment. Daily sentiment is hardly giving you anything. Daily sentiment is giving a mixed signal. It might be good, it might not be good. Out of 9 indicators, almost 5 indicators are suggesting a downtrend. So you don't have to carry it further to next day. Take your profit and loss. I'm talking about losses as well because eventually it's a data. Eventually it's the momentum trade. It may fail, it may not fail. And if it fails, then you need to get out at a loss. So quick entry, quick exit, enter at your own risk. If you want to take it further for a positional trade, enter at your own risk. Otherwise, for us, it is a out and out intraday trade. Take example of NAM India or Sun TV. Say Sun TV. Sun TV, again, daily sentiments is mixed. There is no point taking a positional trade because all the other factors are indicating a downtrend. So you take a quick entry, quick exit kind of a thing. Okay, now coming on to the second screener, which is 80% all time. 80% all times means that the stocks which are coming in this ticker, either the up percentage or the down percentage has never dropped below 80%. Say for example, CanBank. CanBank, this particular average, which is indicating 93% at the end of 330, has never dropped below 80%. So this is a good sign. So this is a sign of confidence that you can take it on a positional basis also, for say for BTST or for a short-term positional trade. Because why? Because the sector to which the CanBank belongs is also very good on a medium-term to long-term structure. So you can take it as a positional trade. Say I'll give you another example of a short side. So short side, I will take example of Balrampur Chini. Say Balrampur Chini. This down percentage, which is indicating 90%, has never fallen below 80%. So never ever it has touched even 79%. So this is the beauty of our screeners, that it identifies you the stock or gives you a filtered data. So at any particular time reference you are looking at, if you are looking at 70%, then 80%, then it gives you a very a better understanding of how you should look at the markets. Relative strength. Now the third aspect is relative strength. Relative strength gives you stocks which are relatively stronger than the markets or the peer group. Like yesterday, Axis Bank was out and out a blast. Why out and out a blast? Because it has gained much more than what the entire banking sector or the entire Nifty or Bank Nifty traded. The reasons may be anything. Reasons may be, some of you may say that it's a fundamental reasons. I don't care whether it is a fundamental reason or it is a genuine price action. But the price action did happen and it is captured in our software. That is much more important. Much more important in that sense that you are ready to take a call based on some logics. You are ready to take a call which will eventually might give you a better return than the other stock which you might pick. It's all about taking a probability trade. If trading HDFC Bank has a better probability than Axis Bank, I would rather go in for HDFC Bank than for Axis Bank. So it is not respecting one stock or disrespecting other stock. It is respecting the probability. So take example of Divi's Lab, which is coming in the relatively weaker side. So when I talk about pharma, I would rather say that I don't want to trade Laurus Lab. Say for example, Laurus Lab is also coming in 80% all-time negative side. So I would not take Laurus Lab as a shorting opportunity. I would rather take Divi's Lab, just because I want to respect the strength which might be on the negative side or might be on the positive side. So this is how you take the decisions. The third screener is for those who doesn't want to take any trades other than trades from Nifty side. So what we have done is we have given you Nifty 50 ranking. So Nifty 50 ranking, when you click, it gives you top 5 stocks and bottom 5 stocks within the Nifty bracket. So in this, what you can do is you can also do certain kind of pair trading. As I have already discussed, you could have always got long on Axis Bank, and to counter that, you could have always gone short on IndusInd Bank. Say some might say that okay, the banking sector was positive, so I would have made losses on IndusInd Bank. But that is the working style of pair trading. If it is gaining strength, then what will happen is Axis Bank will move much more faster than what IndusInd Bank will move. So all things said and done, it will give you a much better trading experience and opportunities. So, and other than that, you can see all the 50 stocks based on the ranking. So from Shree Cement to Axis Bank, or from Axis Bank and HCL to JSW Steel and Asian Paints. So this is how you should look at Nifty strength ranking. FNO strength ranking works on the same way as Nifty strength ranking. It's just that in Nifty strength ranking, we have only taken 50 stocks, and in FNO stocks, we have taken the whole bracket of FNO stocks from 1 to the list continues to 196. Okay, so this is the thing. Stock positional talks about only Nifty 50 stocks, buy above and sell below levels. M&M, you take buy above level, and for say for Reliance right now it is sell below, Adani Ports it is sell below, Asian Paints it is sell below. So this is how you can filter the stocks. Keep the stop loss in mind, target in mind. Stop loss is also given over here. Every stock has a stop loss, defined stop loss. So you can look at that particular stop losses as well. Then coming on to the miscellaneous, I've already discussed. Buy sentiment less greater than 60, all these stocks will come up like this. Sell sentiment greater than 60, all these stocks will come up like this. So, and all these stocks have your pivot point theory: S1, S2, S3, PP level, R1, R2, R3. So you can make use of your pivot point theory, and if you don't have enough time to analyze all the things, you are already interested in either shorting the stocks in the market or buying the stock in the market, then you can look at these things. Now coming on to some of the advanced level tabs, as you can see in the newer version, I'll just quickly check on the newer version as well, or if you give me some time, I will show you directly on the newer version. So this is how our newer version looks. It is easy to navigate. I'll quickly show the navigation also. So here in the derivatives, if you see derivatives, there is two tabs. One is below support and above resistance tab, and one is near support and resistance tab. How it works and how you identify the stocks based on these screeners is, just click on this. It will give you a list of stocks, possible stocks. You can also filter that stock based on percentages from 0.5, 1%, 1.5%, 2.5%, but we'll say that 1% till 1% is good enough. So all these stocks which are coming within 1% is good enough. So how to take trades based on this particular data? This particular data is of stock options, and it may not work correctly in the expiry week. I repeat, it may not work in the expiry week just because stock option has a physical delivery, and most of the retail participants are already in the next series, and all the other participants also, some of them are also in the next series. So these data might not work. But how to look at from a future perspective is that you need to check the change in OI and the percentage change in OI. So if you closely look at, say, ICICI Bank, yesterday ICICI change in OI was 5,48,000, which gives you a percentage of 9% approximately. So what we have concluded over here is that 9% of the active traders closed their position in ICICI Bank when it broke the resistance of 900. Once it broke the resistance of 900, it eventually, the current market price was 907.15. If you look at technicals, just click on ICICI Bank. It will give you a technical perspective as well, wherein ICICI is looking very good. So you can eventually take a trade on ICICI Bank. The same call resistance is given over here. Once it breaks above the resistance zone, it is a clear buy. And you have to see the unwinding data as well. If the unwinding is, say, hardly 2%, hardly 1%, or 0.5%, 2%, or in case of Axis Bank, you look at, there is a strong writing data coming up. Even though Axis managed to close above the resistance level, but then there is a huge call writing. at 900 level. So just avoid these kind of a scenario. Say coming on to the put side has support has been broken. So by what percentage the support has been broken? Here you look at 14%, Tata Steel, Tata Motors, 10%. So look at Tata Motors, for example. So Tata Motor will give you say 70% down, daily sentiment down. It can be looked at. But again, you need to look at how much the percentage has gone down. Say Tata Steel. Again, Tata Steel, if you look at from a perspective, 78% down 10, sentiment average not so good. Tata Steel might be good enough to look at from a shorting perspective because it is closer to 100. So it might be dicey. So these things you need to look at from a momentum perspective. When you want to trade momentum stocks or when you want to trade stock options, you need to look at. This near support and resistance tab is for the stocks which might be on your watch list today and might break above resistance or break below support. So it is the data is cooking. This is a underripe fruit and this is a ripe fruit. This is underripe. So you need to make a watch list first and then take a call. And in this call, near support and resistance tab, it is an unfinished business. This is actually a ripe fruit. So basically the difference between the two. So you can create a watch list. You can have your own, say like Infosys for that matter. Say unwinding has happened to the tune of 3.4% or Glenmark, 28%. Look at Glenmark. See, I'll just show you Glenmark how it is. 88% daily sentiment up, very beautiful. Stock highest delivery by. Look again. I'll go back to the delivery tab and tell you from where the highest delivery has come up. This buy at the rate 392.85, where it has come from. Again, I'm going back to delivery tab. Delivery tab, I'm typing Glenmark. Here is Glenmark. Highest delivery, just take highest delivery. Oh, there it is, a highest delivery. Highest delivery at what? 29 September, highest delivery. Look at this. 2900. 29 September, highest delivery. Okay. Now just look at the high of the highest delivery. 392.85. Can you draw a correlation between what we have just discussed and where is the highest delivery? Stock analysis will go to stock analysis and or just will go to derivative section. Now Glenmark. So the same highest delivery 392.85 is being stated over in the stock analysis. So these are the things which will make you a better trader. Okay. So now with this, I have come to an end of the 2.5 hour long sessions. I know some of the participants have really left the seminar webinar just because of the timing thing.